All right, I want to welcome everyone to the Profit Zone, Trading for Profits. My name is Angela Powerhouse Williams, CEO Infinity with my econ. And on tonight's training session, it is all going to be about mastering futures trading. I'm kind of taking little bite sizes of this big, massive amount of education and trying to make it as simple as possible for you. Once again, this is not something that I expect for you to master extremely fast. You're going to learn at your own pace. This video, I don't expect you to get everything that I talk about in these training videos. They are recorded so that you can continue to go back and rewatch them over and over again, because I promise you, you're going to pick up on a nugget that you might not have caught the first time. And once again, none of this is going to register or come into play until you take your very first trade. All right. So the session tonight is again about making sure everybody understands what the perfect setup is of when to enter the market. I'm going to introduce you to a app that I am using actually on the NinjaTrader side, where it can help some of you who do not have access to a laptop. You don't have a laptop that you can carry with you when you want to do your trading and you're doing a whole lot of trading on the phone. So this may be an app that may help you. We're going to talk about the tracking journals. We're going to talk about basic candlesticks. And we're going to review the market today. And again, I'm going to go over the trading plan that you are going to use in order for you to master trading in the futures market. Again, before we get started, here is the disclaimer and disclosure agreement. I am not a financial advisor. I will not tell you what to invest in or what stock to pick. This training is for educational purposes only. Please be aware that all trading transactions can result in potential loss, and you should only be trading with disposable income, not car notes, not mortgages. This is not a get-rich-quick scheme, and do not leverage or trade and deposit more money than you can afford to lose. The disclosure for information is you may not discuss, share, reproduce, copy, reprint, modify, rewrite, create, distribute, publicly display, publicly perform, license, or sell content retrieved or learned from this presentation without the express prior written permission from myself, Angela Williams. Again, this is my business. This is my trading educational course. The Profit Zone, once again, is by invitation only. Last week, for the past couple of weeks, we have been talking about the futures market that we're trading in. And it's important. I know there may be some people who have just joined the Profit Zone. I encourage you to go back and watch all of the prior videos over the weekend so you can get caught up to where we are right now. And just on a high note, I just want to share again the benefits of scalping and day trading the futures market. My reason for teaching you how to trade is so that you can have income insurance. You want to be able to create money that does not depend on a job. It doesn't depend on a business. It doesn't depend on a team. It doesn't depend on anything but your skill level. And when you're able to create money out of thin air, I call that security. It is going to allow you to recession-proof your income. We all know that if you got a job, you got one source of income, you don't own it, you don't control it, you can lose it at any time. So learning how to day trade so that you can just sit down at a computer and you can make money is going to allow you to fill in the gaps if something was to ever happen to your primary source of income. We are trading the futures market, again, because it is the largest financial market on earth. Now, what I have in my mind as far as trading education is to first start with the futures market because it's the biggest market. Then go from the futures market to teaching you how to swing trade the stock market, then teaching you about binary options, and then teaching you about Forex. And we're kind of going to go exactly in that flow. And so that advanced training is going to be for the people who eventually gets to Futures Live, because once you learn how to trade Futures Live, you will have enough education and enough skill set to trade all the asset classes, because a master trader do not just trade one thing, because you'll learn that this trading plan that I gave you works across all the markets. All right. We are focusing on futures first. Again, it is the largest market. It's a $544 trillion market. It's bigger than the Forex market. It is extremely liquid. You can actually reach into this market and grab out cash 6 days a week, 23 hours a day. Now, do I want you trading 23 hours a day? Absolutely not, but it is available. It requires no license to be a day trader, and you are not confined to day trader rules because the futures market is not regulated. The futures market has the lowest capital requirement. You know, a traditional day trader who is trading stocks usually would have to open up their brokerage account with over $25,000. And so the future market allow you to get started for a minimum capital requirement as little as $1,000. So if I had to come up with $1,000 versus $25,000, you know, that is the reason why most people are not in the game. That's why most people don't know nothing about trading, because this level of income production has always been closed to us, because for most people, you did not have the capital to be able to play in the game. And so now it's opened up. And so it's an opportunity for you to be able to change your life. The futures market pays out the most money the fastest, way faster than Forex. You know, in Forex, you got to catch 100+ pips to make some real good money. Where you will notice once you start getting out there and placing your trades, the futures market can give you a quick $100 to $1,000 in less than an hour if you wait for your perfect setup. Also, because we are trading in the futures market, in particular, we're trading the S&P Minis Futures Index, we have the ability to make money when the markets go up, and we have the ability to make money when the markets go down. You know, people who are just investors, where you invest in a stock and you hold it for long term, you only make money when the markets go up, and you lose money when the markets go down. And since now that I'm teaching you this day trading skill set, you're going to be able to hedge your retirement accounts, because when the markets go down and your retirement account takes a hit, you can make up for it by trading in the futures market. And what I absolutely love about being a day trader is that you can trade anywhere. You're not confined to an office. You can trade in your pajamas, in your bed. You can trade on the beaches of the world. You know, all you need is just a couple pieces of equipment and you in the game. And so what I'm going to be teaching you by the end of this session, especially once you go live, you're going to see how you now have your own personal ATM machine. Now, it is important, everyone should already have their Thinkorswim charts loaded on their laptops. You should have your Thinkorswim chart loaded on your mobile devices. Now, it is important that you have your trading room set up. This is a basic picture of a trading room where I have my laptop. As you can see, I got my Thinkorswim charts on my laptop. And then I have my iPad on the side, and then I have my phone. Now, what you know is that the Thinkorswim chart, stock charts on our desktop cannot be loaded to our mobiles. So our mobiles only give us basic candles, red or green. But you know, our desktop charts distinguish between hollow candles and solid candles. And we're going to talk more about that tonight. But the ideal setup is for you to have a desktop or laptop so you have access to our Thinkorswim chart. I need you to be able to know the difference between a hollow and a solid candle. It's going to make a difference in your profits. And so if you do not have a laptop or a desktop, I encourage you to save money, or when you get your tax return, take about $300. You can go to Walmart and you can buy a cheap laptop, only use it for trading, and it is enough space for you to be able to still trade with high speed with an internet access. So I encourage you to get a laptop or a desktop. Now, I also encourage you to use your laptop or desktop to make trades between the hours of 8:30 and 3. And the reason why I say that is because the market is so volatile that if you're only trading from your mobile phone, you might get caught. And what I mean by that is the mobile phone, again, only shows you red candles and green candles, and they're both solid. So that means you don't know when the market is going up in the uptrend, and you don't know when it's going in a downtrend, because all of the candle action is the exact same. And so what happens is you can get caught up when it's a significant drop in the market, and you don't know that it's gonna drop more, and you're trading from the bottom band, you'll get caught. And when you get caught, you'll find yourself losing money. And so between 8:30 to 3, I do recommend that you trade from your desktop. Now, if you only have mobile devices available, so you only have your iPad to trade on, then I recommend, or you only have your phone, I recommend that you trade after hours. That means trade from 5 p.m. at night till maybe 1 o'clock in the morning, because actually from 2 a.m. to 3 p.m. is kind of high volume. So you don't want to be caught out there at that time. So if all you got is a mobile device, do the 5 p.m. to maybe 10:30 p.m. And then you can also do like a 6 a.m. to 7:30 a.m. if all you have is a mobile device. The mobile device will work if it is low volume times. When it is high volume times, I definitely recommend that you always go to your, please go to your desktop. Now, if you have just mobile devices, if you have an iPad and you have a phone, whether it's an iPhone or it is an Android, then what I want you to do is, you know how when we set up the charts, we set up 4-minute charts? Well, what I want you to do is on your iPad, I want you to change the time from 4 minutes to 15 minutes. So I want your iPad to have a 15-minute chart and have your iPhone or Android at a 4-minute chart. That way you can look at your iPad to give you trends and confirmation for when you actually take a trade on your mobile device using the 4-minute chart, okay? But again, I do not want you to trade 100% from a mobile device, okay? Again, because it doesn't give you the distinction between a hollow candle and a solid candle. Now, here is an option for those of you, especially if you have a job, and of course you can't bring your laptop to work with you. There is a software and an app that is called TeamViewer. So if you go to teamviewer.com, they have they have a free download, like a free software that you can download to your computer. And it's going to give you like a remote control ID and password. What it does is it pretty much mirrors whatever is on your desktop running. So if you got your Thinkorswim charts set up, you can actually click on the TeamViewer, download the software to your computer, and like I said, they're going to give you a user ID and a password. And then you're going to download the TeamViewer mobile app to your phone. Or you can use your iPad. Well, I don't know if it's on iPad or not. It may be, but I know for a fact it'll download to your phone. When you download to your phone, so what you'll do is once you download the app, when you open up the app, it's going to ask you for the username and password to your desktop or laptop TeamViewer software. When you put that information in, your phone is going to mirror what's on your desktop. So as you can see on the bottom right hand side here, this is my team viewer set up on my iPhone, and I just have my iPhone turned to where it's like a landscape view. And as you can see, it looks exactly like my desktop. Both of my charts. Now this looks a little bit different from you all because when we go live, we're actually live in NinjaTrader. So this is my NinjaTrader button controls for me to place trades. So it'll look a little bit different than yours, but this is how you can get your charts on your phone. And all you do is you press your buttons. You press your remote buttons just as if you were sitting at home in front of your computer. And it will allow you to get in and out of trades. And so the only thing that you would have to do is you would have to turn your computer on at home. You would need to log into your team viewer at home, open up your Thinkorswim, and then what you'll need to do is already, set up your contract, set up, how many contracts you want to trade, or maybe if you're just using the active trader and you're just trading one contract, it does not matter, okay? Just make sure that your computer is set up exactly how you want it to look on your phone. And you can leave your house and you can trade anywhere. Now, here is the downside to this. If you have children or you have someone that has access to your home and they will go into your room and they will see that your computer is on, if they start pressing buttons, it could put you in the market. So if you got small children who, if they saw your laptop on, they will go up to your laptop and start pressing buttons, you might not want to do this. This is for someone who can turn their computer on. They don't have to worry about anybody touching the computer. You ain't got to worry about nobody pressing no buttons, and you are fine. So this is just a workaround for some people. Like I said, if you can put your computer in a room, close the door, don't have to worry about nobody coming in, you're going to be fine. But if you got small children, then I wouldn't recommend that you do this because you can't control them when you're not at home. Also, make sure that you order your 90-day goal planners in the LSC Trading for Profits Facebook group. If you scroll through the messages, or if you use the search field and type in planner, goal planner, it should pull up the link that you can go to where you can order your free 90-day goal planner, and the only thing that you have to pay is the shipping. So the planner itself is free. It's an awesome planner. You'll be able to write some goals for yourself. Every day you should set an income goal. And then what I want you to do is I want you to track in this goal planner your trades for the day. So every time you place a trade, I want you to write down what price you got in at. Did you do a buy or did you do a sale? And what price did you get out of? How much money did you make, or how much money did you lose? And what time did you trade? Because what this will do is this will tell you your habits. It will tell you your habits. It'll also tell you where you can identify where you're doing good and you can identify when you're doing wrong, but it's really good to keep a planner of your results. Now, what you're gonna notice when we are day trading with the futures market, and I just wanna kind of go over it again, we are not concerned with the financials of a company, okay? Because we're not buying stock to hold stock or to trade stock. What we're doing is we are speculating, we are hedging the markets. We are not buying any asset that we plan to own to sell later. We are strictly hedging, okay? So we don't care if a company hit their sales goal. We don't care if the profits went down. We don't care about the PE ratios of a company. We don't care about the dividends. We don't care about the financials at all. The only thing that we care about is the technicals. What do the stock charts say, and how do people feel about that stock price at any given point? That is the only thing that we care about. And all we want to know is when we look at that stock chart, we want to know who's in control. Are the bulls in control or are the bears in control? That's the only thing we care about. And we are looking at these candles to determine if there are any patterns or trends that take place that would suggest where the S&P E-mini futures index is going to go in the future. That is it. And our whole position is we're trying to forecast the future. And we want to profit if the index go up, and we want to profit if the index goes down. That is all we care about. The only time we listening to the news to see if it will affect people's emotions. That's it. Because guess what? When Apple didn't hit their marks, their revenue marks, guess what? I didn't care. All I did is shorted the market when they did that announcement, so I made money when their shares went down. That's all we care about. The technical side, that is it. Charts, charts, charts. So what we're going to talk about right now is the autonomy of a candlestick. Because again, all we want to know is who is in control. Now, both of these charts are going to tell you the exact same thing. The left-hand chart is pretty much what the charts look like on your desktop or laptop. The right-hand side is what the candles look like on your mobile devices. Remember, mobile devices only give you solid candles. Your desktop gives you hollow and solid candles. Now, so let's talk about the left-hand side. Let's talk about this desktop. Again, we just want to know who is in control. So if we start on the left-hand side, you will see this candle that is outlined in green. What this is a hollow candle. A hollow candle is where there's no body in the inside. It's empty. And all you see is an outline. Okay? So when you see a candle like this, it doesn't matter if the outline is green or the outline is red. It still symbolizes that the price is pushing up. That's what a hollow candle is telling you. So what it means is a hollow candle, which means the price is pushing up, it tells you that the price opened low. Okay, so the price opened right here. It went down a little bit. And then guess what? The bulls, they started taking control. The bulls are the buyers. These are the people who said, wait a minute, these companies is doing good and the sales are hitting. We need to raise the price. We're going to raise the price. We're going to raise the price. We're going to move it up. That's what the bulls are doing. It stopped right here and then it fell back down a little bit and then it closed. Every candle represents a session. So in every session of a candle, you got the opportunity to make some money. All throughout this candle is cash. So your job is to jump into this candle and grab some cash. So the bulls is pushing the price up. Now these little sticks that are sticking out the top, or it might be sticking out the bottom, or both, they're called wicks or shadows. So when you hear people talking and you hear them talk about wicks, this is what they're talking about. I call them stems because when I look at them, I'm like, it looks like a stem, but it's a wick. They call them wicks and they call them shadows, okay? And so these bodies, depending on how big these bodies is, tell you if somebody has strong control or they have weak control or they starting to lose control. So again, when you see a hollow candle on your desktop and it is green, that is a strong bull market. They're moving the price up. If you see a hollow candle and it's outlined in red, it means that the price is trying to push up, but in a downtrend. That means it's quite possible that the price will go back down instead of continuing to go back up. Now let's look on this right candle. This right candle is when it's red, a solid red, which is what you're going to see on your desktop. that means that the price is falling down during that session. So when a price is falling down, that means it opened up high, okay? So it opened here at the beginning of the body, all right? It might have went up a little bit more, then it reversed back down, and it went down, it went down, it went down, it went all the way to this low, the session low, and then it went back up, and then it closed. So this is the open of a down candle, the close of a down candle. When the candle is red, it's a solid red, that means the bears are in control. That means that it is people who are in the markets and they say, wait a minute. You are overpricing the stock. You are overpricing these stocks, and we need to bring it down some. That's what we want to do. There's also people who is bringing this down and shorting it down because they want to be able to buy it low so they can turn around and sell it high. Then there's people who bought when it was low and they want to start selling because now they want to take their profit. Okay, so when you see a solid red, it's going down. So when you see hollow candles, whether it's red or green, those are buyers, those are bulls, the price is trending up. When you see a solid candle, whether it's red or green, that means that those are sellers who are in control and they're trying to lower the price. So only on your Thinkorswim desktop chart will you see hollow candles and solid candles. Now, on the right-hand side, this is what your candles look like on your mobile device, your iPad, your iPhone, or your Android. Thinkorswim do not allow us to create hollow candles on the mobile devices. So this is all you have. And so they kind of work in the same way as the left. If you see a green candle, the price is moving up. If you see a red candle, the price is moving down. The only problem with the mobile device, you have no idea if it's moving, if the candle is moving up in an uptrend market or is it moving up in a downtrend. Because if it's moving up in the downtrend, there's a possibility that if you buy, it's going to reverse on you and you're going to go negative. The same thing with the price going down. You see a solid red candle on your mobile device, you're like, okay, the price going down, let me short the market and sell. But guess what? It's going down in an uptrend market, so that means it could reverse and it could go back up on you. So that is why I only want you to use your mobile devices in very slow, predictable markets. Use your Thinkorswim left-hand side of your desktop between the hours of 8:30 and 3 p.m. or 2 a.m. to like 4 a.m. Use your desktops, because in the middle of the night is when the international markets get into the game and you see a lot of volatility. Don't be out there on your mobile devices. Now let's talk about understanding what each candlestick is telling you. Now this is just an example. I didn't have no examples of hollow candles, so just know that this on the left-hand side, this green, this represents hollow candles. Okay, hollow candles on your Thinkorswim desktop is hollow. It's not filled in. On the right-hand side is the same thing. You don't have the ability to see hollow. All right. So, but let's just talk colors. Let's keep the colors basic. Green up, red down. So what is each candle doing? So this first candle on the left-hand side, this is a solid candle. This candle is called an engulfing candle. This represents a strong bull market. And you're going to know it's a strong bull market because it doesn't have any stems out the top or the bottom. It's primarily the body. When you see this body, that means them bulls is in 100% control. So when you see a candle like this, go ahead and jump in with a buy, because it's going to keep going for a little while, okay? When you see a strong bull like this, you know 100% who is in control and the price is going up. The second candle is called a shooting star. See, this is what I want you to know. Every candle starts as an engulfing candle. Every last one of these candles start off as an engulfing candle. You're going to know who's in control based on the size of the body and the wick. So if an engulfing candle, a strong bull, tell you that that bulls are 100% in control, when you look at a shooting star, guess what? The shooting star is saying, hey, I ain't paying that much. I'm finna bring this price down. I'm sorry, I'm not paying this much. And it started eating it away and dropping the price and dropping the price. And then it settles on a price amount. So what this says is that even it's green, so that means that we're still in an uptrend market, but there is some resistance. It's some resistance. That means these sellers is bringing this price down. That means that people don't want to pay that price. So since you're getting resistance, if you see a candle like that, your instinct should not be, I'm finna place a buy order, because it's telling you, hey, slow down, resistance, we might start shorting the market. The third candle is called a spinning top. Again, the spinning top, the top and the bottom is pretty much even as far as the wicks are concerned, or the stems, I like to call them. And then it has this little body right here in the middle. This is also telling you that the bulls and the bears are neck and neck, and nobody really has control, but the bulls got a slight advantage. So what you're going to do is, when you see a candle like this, you want to wait to the next candle for confirmation on whether or not it's going to continue to go up or go down. Your fourth candle is called a hammer. When you see a hammer, that means that at some point, this was a engulfing candle. The sellers tried to take control and they dropped it down. And then the buyers was like, no, this is too low. I'm finna run this back up. And when they run it back up and it closes right here, it's letting you know that there is support out of bulls. That means buyers is coming into the market. They coming into the market. And so what will happen is, let's say on Thinkorswim, when you see a solid green candle, that means that the market is dropping. But when you see the price action start to pick up, that's telling you that there may be a reversal, meaning that instead of the price continuing to go down, it may start going up. See, all these candles is telling you a story. And all you want to know is who is in control. Because whoever is in control will determine whether or not you getting in the market was the right thing for you to be doing. This fifth candle, this is called a spinning top. It's called a spinning top. And basically, again, it's indecision. Anytime you see more wick than you see body, you need to pause for a second and look and see where the next candle is going. Sometimes you will see this with a little bit more body, and those are called harmonies. I didn't have an example of a harmony on this chart, but once again, these all symbolize reversals. So the same is true. The reverse is the same as what I just talked about. So when you see red candles, when you see a long red candle, the bears have strong influence. They are 100% in control. They are driving the price down, and it ain't nothing that the buyers can do about it. The bears run this. When you see this, you should never be buying. You should be shorting. Again, an introverted hammer is just the flip side of a hammer. So when you see a hammer happen, that means that the sellers are, again, in control. That is what it's telling you. The sellers are in control. The third candle, the spinning top, once again, It's a fight between the bulls and the bears, but right now the bears got a slight advantage. So you always waiting for that next candle to give you some confirmation. We got the hanging man. Whenever you see this hanging man in red, what that is telling you is that a reversal will be coming. So instead of it staying a solid red and continuing to fall down, this is telling you that the bulls have stepped in, and the bulls is overtaking the bears and is trying to push the price up. So what are you not going to be doing? Still trying to sell. You want to be still, you want to look, you want to pay attention to the next candle to determine if it's going to continue to fall, or is this your reversal sign that it's going to go back up? Again, the spinning top or Harmony, indecision. It's indecision, but every last one of these candles, from the shooting stars to the hammers to the spinning tops, is all telling you stop and pay attention. Stop and pay attention. The doji, you're going to see this, especially if you are watching the markets live while the candles are forming. You will see these dojis look like they look like crosses. Okay, and when you see a doji, that basically means there's complete indecision. It's neutral. That means ain't nobody winning. That means everybody sitting out the market trying to figure out what they want to do. The buyers don't know if they want to raise the price, and the sellers don't know if they want to drop it. They just don't know. They just don't know what's going on. A lot of times, when there is like a special news coverage, like the feds are going to make an announcement or something like that, you will see the markets trend, and then you'll start to see them slow down. And then it might start trending sideways, but you'll see them slow down, and then you will see this doji. What that doji is telling you, we're waiting to hear what the feds say. And based on what the feds say, we either go shoot it up or shoot it down. So whenever you see a doji, pause. If you are in a trade, let's say you're doing a buy and the price is going up, up, up. The moment you see a doji, close and take your profit. Because most of the times you may see a doji, and that could be a symbol that a reversal is happening. If you see the dragonfly doji, that still tells you to have caution, but it's letting you know that the bulls may be trying to take over. So it's kind of giving you a little shot of what the future might be doing. When you see a bearish doji, that just means that possibly the bears is trying to take over and bring the price down. Either way, don't make a move, don't be in the market. If you see a line like this, which is extremely rare, that means it is 100% total uncertainty. There is zero volume. That means it's not one open order in the marketplace. Extremely rare, but it's called the floor price. That means that everybody is in agreement with the price right now at this moment. So again, whenever you see these, stop. Now, like I went through each one of these candles, like there are a number of different candle patterns that are out there, but I only want to focus on a few that you're going to see in the futures market. And the reason why I'm focusing on these few is because these candle patterns will alert you to reversals. Okay, I definitely want you to know when to get out of a trade, because I already tell you how to get in a trade. What's important is that you know when to get out of a trade. So when you put these candles together, they start to tell a story. And later on in another session, we're going to talk about big picture candlestick patterns. But what I want to talk about is how these one little candles can tell you when to get out of a trade. Because I want you to think about these candles as your destination. If I wanted to go from Chicago to Detroit, I need to pull up my Google Maps. My Google Maps have to give me the directions of where I need to go. But in the Google Maps, it also tells me when accidents happen. It tells me when construction is happening and asking me, do I want to take a different route? Maybe I won't keep going the way that I'm going. I might need to turn into another exit. That's what these candles that I just talked about is going to tell you in the market. And so what it's going to do is going to eliminate last minute decisions. How many times you've looked at your chart and you've seen a candle and you like, man, that's a big candle, I should get in. When you see one of these candles that mean reversal, you're going to say, nope, I'm not finna get in. They go to reversal candle. I ain't finna get in. It's going to make you more focused. It's also going to help you avoid what we call FOMO, fear of missing out. Because a lot of times people jump into markets and place trades because you're worried about missing out on money because you missed the trade. I'm here to tell you, it is so much volatility in the futures index. If you missed it in the morning, you probably get another chance again in the afternoon. If you miss it one day, guess what? Tomorrow is a brand new day. Don't chase candles. Treat these candlesticks patterns as your GPS for trading. So let's look at it right here. So in this example right here on the left-hand side, what we see is that the market is in a downtrend. All you see is red candles. That's all you see. Then you see what? You see a spinning top, right? You see a spinning top. Well, what does a spinning top tell you? What that means is that this candle at some point in time, it was a red solid. And then it started, the buyers jumped in and said, no, 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 no. I'm finna raise this price, this too low. Or the people like, oh, they done dropped the price down. I want to jump into the market and I'm finna buy. And as they start buying, price starts raising back up, raising back up, raising back up. So when you see this, this is telling you that the buyers are jumping in the market. So what you're not gonna do is continue to sell. You're gonna look at this next candle to see if this next candle is going up. And if it is, that's letting you know that the downtrend has stopped and reversed and now is going the opposite direction. Also, if you shorted the market and you got in the market with your sale, when you saw this candle form, you would have closed your order, took your profit. If you kept it open, it reversed and it went up, up, up. Now you're in a loss. Okay? The same thing here. You see right here, the market started moving up. It started moving up. Then it went all the way up to the top. And then bam, what did you see? What did you see? You saw this was pushing up, which was letting you know that it was trying to go up in the uptrend, but look at this body. This body turned red, or in your case on the Thinkorswim charts, this body is solid. It might be a solid green. It's going to let you, because on Thinkorswim, these solid green candles are really hollow candles. So when you saw that solid candle right here at the top, that's your signal that it's going to reverse and drop the opposite way. Okay? Now I want to share with you two patterns that when I see them, they're my favorite patterns. When I see them, I already know that the reversal is about to happen. They are called tweezers. They are called tweezers. Whenever you see a candle, two candles, you see it right here. Whenever you see two candles that are opposites, you see a red candle, you see a green candle, or you see a solid red candle and then you see a hollow green candle. If they close at the exact same price, you see how everything is even? The bodies is even. The stems, the wicks are even. Those are called tweezer top. These are called tweezer bottoms. So when you see a tweezer bottom, that's letting you know that the reversal is going to happen next. So in this case, the market was dropping, it was dropping. You see a harmonic candle, which is like slow down, but it kept dropping, kept dropping. The very next candle turned hollow green, but it's the same size as the red candle, closing at the exact same time. okay? Then the reversal happened. It went up, up, and up. That lets you know that this short has ended. It's finna reverse, do the opposite side. This is a tweezer top. The market was going up, up, up. It stopped. It went sideways. The next candle was the next color, closing at the same price. Stems match equally across. That means that the reverse is finna happen. It dropped down. So as you start to continue to look at these charts, because you should be looking at them on a daily basis, at least an hour a day. Just start looking. Even if you're not trading, just look at the charts and start paying attention to the candles and what the candle does. And you're going to start to see these patterns, and it's going to make it so much easier for you. So let's do a pop quiz. And you can put your answer in the chat. True or false? A hammer candle, this hammer candle, does it signify that the bulls are trying to take full control of the session, and also a sign of a potential reversal trend? The answer is true. True. Because remember, this was a solid candle. A solid candle always means the market is going down. And it's showing that the bulls are trying to take control and they're trying to push the market up. So if the market had been trending down and then you see a candle like this, it's going to reverse on you. So let's see if you can spot a hammer. And I don't expect you guys to know this right off the bat. You're going to continue to watch this video and you're going to start studying the charts. Do you all see any hammers? Do you see any hammers? Look at these charts and see, do you see any hammer? Hollow candles means it's going up. Red candles means it's going down. And this hammer is letting us know that we're looking for a hollow candle. So do you see a hollow candle that looks just like this? Do you see a hollow candle in this chart that looks just like this? Here we go. It was right here. This hollow candle was a hammer, and this hollow candle was a hammer. Both of these candles told you that a reversal was about to happen. Right here, the market was short, and you see these red long candles. The market was falling down. The prices were following down. Then you saw this hammer, and it's a hollow candle and a hollow hammer. That means it's not going to keep falling down. It's going to start going up, and you see these hollows start to take place. In this example, the price was going up. These were hollows. You see a doji, but then you see this hollow right here. This hollow is letting you know that they still trying to push the price up, okay? So in this case, it wasn't going to be it's going to be a reversal. So that means the next candle after this was probably going to start to be a solid red candle. It's going to, instead of continuing to go up, it's going to fall and go back down. False. A shooting star, which is an upside down hammer, does that signify that the bears are trying to take control of the session and also a sign of a reversal trend? The answer is true. Remember, when you see a stem sticking out long at the top, the sellers are trying to take over. When you see a stem sticking out from the bottom, the buyers are trying to take control. Look for an inverted hammer. That means that you're looking for solid red candles that look like this. The hammer is upside down. It's laying on his body. That means the sellers ate this whole body of the candle up. They're trying to bring the price down. So when you look at this chart, you're looking for red hammers. Do you see any red hammers? Here you go. Red hammer. Red hammers. Red hammers means that it's going to bring the price down. This is actually a spinning top. That's not a red hammer, but this is spinning top. Here's a red hammer. This red hammer. This is something that you see when I tell you all to, if you see a solid red coming out the top of a line, this is what I'm talking about. It looks like this. It's either a solid red or it's a solid green. That's an inverted hammer. Whenever you see that, the next candles are going to start dropping. That lets you know that a short is about to happen. Look at this doji. This doji, look at this. The price, these hollow candles, the price was going up, up, up. This doji said pause. Look at what the next candle does. It starts to form, almost look like an inverted hammer, but not exactly. It almost is pretty much a harmony, which is like a spinning top, but it's a solid red that lets you know here go to drop. Here go to drop. And what I want you guys to do is, as you continue to start looking at these charts, look at the candles and just see if you can recognize the different candle styles on the charts. And then look and see what the next candles or the trend starts to happen, and just to see if it's right. Okay? Remember I said, here go a doji. The markets was going down, then you saw a doji. What does a doji tell you to do? Pause. So if you were shorting the market, when you saw that doji, you'd have closed your order and took your profit, because the very next candle started to be hollow. Don't get caught still shorting, not paying attention to what the candles are telling you. Right here, you see a introverted hammer. But remember, you see that it's hollow. That means that this was a complete hollow candle. But then the sellers got in control and said, no, we don't want the price to continue to go up. We want to bring it down. So this is telling you that the sellers are trying to take control. The next candle was what? A solid red is going to short a little bit more. Then it started right here. It started to go up. Started to go up. Doji, stop. Yeah, so if you were doing a buy and you was riding it up, you saw the doji, you would have stopped. The very next candle turned red, drop down. This is the perfect example of a hollow candle going out the top, and the next candle coming down was a solid red. Short. Same here. A hollow candle going out the top, a solid red coming down. But the reason why you knew this was going to happen, this is the tweezer. Look, the closing happened at the exact same price. One candle was hollow, one candle was red. Equal. That's tell you there's a reversal. It dropped down. It dropped down. Okay. Here's another introverted hammer. Price drop down. So again, this is not something that you're going to know. This is going to take time. Just study the charts. Just study the charts, you guys. When I got started into this trading and stuff, I'm telling you, I remember I took one day, I stayed up for 24 hours. I watched the entire S&P 500 index for an entire hour, and I tell you, I learned so much. And so when I saw certain candles, I knew exactly what was going to happen. Let's talk about the perfect setup for when you are to get into the market, because right now you don't know all those candles, you don't know all those candle patterns, but you still could be taking practice trades when you stick to my very simple trading plan. It's really simple. You got a 5-minute chart and you got a 15-minute chart. The 5-minute chart you're going to use to place an entry position, and the 15-minute chart is going to tell you the trend of the market. Is also going to confirm that you are making the right trade. You are looking for particular setups, and I'm telling you that it requires a lot of discipline to master this trading. So number one, we got the perfect setup right here. These are my little Bollinger Bands, and everybody should know what the Bollinger Bands are because you have been in the class for some weeks now. If you don't know, you got to go back to the beginning of the videos. So these are the Bollinger Bands. We are only taking trades, meaning we are only getting in the market when a certain candle hits the bottom band or the top band. If a candle is in between the bands, you shouldn't be in the market. So if you see a hollow candle, a hollow green candle touching or coming through the bottom band, buy. If you see a hollow red candle coming from the top, short, meaning sell. This is 95% money. You see this particular setup and you take it, you're going to win. Okay. Now, this is not true if you're using mobile charts, because in mobile charts, you don't know when you're in a downtrend or uptrend. All you see is solid candles. This is true when you're using the Thinkorswim charts. The next setup. So I want most of you to always be looking for this 95. Always look for the 95. Every day is not a trade day. Always remember that, especially when you go live, because you ain't trying to lose money. So you got to understand is every time you get in that market, you can take somebody else's money or somebody can take some of your money. And you want to be taking more money than they're getting from you. And so what you want to do is you want to master these setups. That's it. Start with trying to always find a 95. Now me, I only do 95s. Now the 50%, you will see a lot. I'm teaching you the 50% because I want you to learn how to trade and I want you to get used to trading. Because if I told you just focus on the 95%, you're not going to take enough trades to really understand the market and the pattern. So that's why I'm teaching you all these different, just not all these different types, but 6 trades. I only want you to take these 6 trades. If you do not see any one of these 6 trades, don't trade. Don't trade. Look for the 95%. If you don't see a 95%, always know when you see it. 50% is if you see a red, solid red candle touch or go outside the bottom of the band, and the very next candle starts to be a hollow red candle, buy. You got a 50% chance of being right. Why do I say that? Because a red hollow candle means that even though the price is going up, it's still in a downtrend. So there is a possibility that it will reverse and go back down. To the bottom left, when you see a hollow green candle that went out the top of the band, and these is usually those hollow green candles that be going up and up and up and up. Those is way outside the top band. If it starts to come down, you start to see that long stem come out the top, and the very next candle starts to be a solid red, short. And even though it's a counter trade, I probably should change this. Instead of 50%, this is probably more like a 75%. Because if you see this, it's guaranteed money. The next setup in the middle here at the bottom, if you see a hollow candle, go out the top again. Because the price going up and up and up. And then the second candle starts to form and it's a hollow green. You will sell, short the market. But keep in mind, when you see a solid green coming out the top, it's telling you that the price is coming down, but you're still in a uptrend market. So that means it's a possibility that it will reverse and go right back up. You should have seen that a lot today. I saw that a lot today. The 80%. If you see a solid red candle that goes out the bottom band, crosses in the middle of the band, and go out the top band, short. The next candle is guaranteed to be a short. The market is going to start falling down, because that's letting you know that the sellers the bears are in 100% full control. The bottom, if you see a hollow green candle go out the top through the middle and out the bottom. That means that the buyers, the bulls, got 100% control at the time. The next candle is probably going to go up and continue to go up. These are 80%. When you see this happen, this is 80%, 50%, 95%. I want you to print this out, put it next to your computer, and as you look at the charts, look and see, do you see these setups? And when you see these setups, look and see what happens and see if these buys and sales are correct. And when they're not correct, that's letting you know that's the other 50%. Remember, it's a 50-50 chance you're right or you're wrong. Let's look at today's market. This is actually a printout of what happened today from 8:30 a.m. to 3 p.m. This is the fastest session. Yeah, this is the fastest session. All right. Now, the first thing that I did when I look at this chart is these are the Bollinger Bands. These Bollinger Bands tell you when to get into the market. And what you're looking for is if the setups I shared with you in the slide before, do you see that setup on the bottom bands or the top bands? So if I scan this and look at this, what I'll notice is, let's scan the bottom band. Do I see a hollow green candle coming from the bottom band? So let me look. Nope. Nope. No hollow green candle coming from the bottom. Nope. 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 No. No. Now I want to look, was there a hollow red candle coming out the top? A hollow red. Let me see. Do I see a hollow red that went through these lines? Nope. 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 Not at all. Okay. So what you noticed today, there was no perfect trade set up. Not one perfect trade. I did not trade today because there were no perfect trades. I have learned to wait for my perfect trade because when I see the perfect trade, I could trade 2, 4, 6, 12 contracts because it is a 95% win rate. So I wasn't in the markets because I wait for my perfect trade. What you did see is some counter trends. And let me show you. What is a counter? Right here, here's a diagram, right here. If you see a hollow candle that goes out the top and the second candle is a solid green, you can sell and short the market. It's right here. This candle was hollow green when you saw it in live. So this was a hollow green candle. It went out the top and then the sellers said, you're not going up no more. We finna drive this down. And that's when you started to see the wick. So this was a full hollow candle. And then that hollow candle started to fall down and create a wick. Okay? The second candle turned into what? A solid green. That lets you know, continue to short. And that's what happened. Now, when you become a master trader, if I wanted to take this counter, when it was hollow and I first started to see this stem, I'd have shorted way up here and rolled it all the way down and kept on going because I knew that second candle was going to start to be solid. It rolled it all the way down. But until you become a master trader, wait for the second candle to form. And it went all the way down. So that was a counter. That exact same counter happened again, right here. This hollow green candle touched or went out the top band. The second candle was a solid green. You can short, and guess what? As you short it, it continued to short, and then it went from green to a downturn red, and it just kept shorting all the way down. Okay. Where else did I see a counter trade that you would have took? At the end of the day, at the end of the day, you saw a red candle touch or come out the bottom and a red hollow. Now, the only thing about these red hollows is that, again, a red hollow means a downtrend. So it may not go up, up, and up. It's a 50% chance that it do. Okay. Let me see. That was it. That was it. That was it. What we do not do is we don't trade in squeeze zones. So you'll notice that the bands expand when it's a lot of volume in the markets, and then they shrink tight when there's low volume. This is choppy. I call this choppy, and this is when the market is going sideways. I do not trade during squeeze zones. Because what it do, it go up, it go down, it go up and go down, it go up and go down. If you in there trading during the squeeze zone, you will lose your money. We only trade when we see a whole lot of volume happening. What you'll notice is that right here, from 8:30 to 10 a.m. is when you see the most volume. It's right here. This is the most volume. You should be able to make money from about 8:35 or 8:45 to 10 a.m. I never trade at the opening at 8:30. That is the fastest way to get caught and lose your money. I usually wait till after maybe 8:35, 8:40, in which you would have caught this candle right here. You'd have saw this, and then you'd have caught this, and you could have got in and got out. This candle alone probably was worth $200, $400, $1,000, depending on how many contracts you put out there. Okay, I'd have got out right here. I wouldn't have got back in again because there's no reason for me to get back in. I don't chase candles. I don't see no setups. None of these match the plan. Most of these candles right here, they're in the middle of the band. They're not even touching the band. Look at it. They're not even touching the band. So if you made money up in here, you're trading in between the candles. That's like casino. You betting. All this is in between a band. So you shouldn't even be in the market. If you don't see the perfect setup, all this, none of this was the perfect setup. None of it. None of it. This was a solid green candle, but guess what? The hollow candle didn't go out the top band. So I wouldn't have took this. Leave it right where it's at. Because what did it do? It went down and then immediately went back up. And if you didn't get out the market, you probably lost money right here. All this stuff right here. I wouldn't be in it. And what happens is, because you see these candles and you know it's money in these candles, it kind of make you want to get into the market and just try to get some of the money, get in and out. What I would tell you is get some discipline. What I know for a fact is that the moment greed touches your heart, God take the money from you. Stick to the plan. By sticking to the plan, you are showing discipline. That discipline will pay you. Never trade in between the bands. Look for the perfect setups that I gave you on the prior sheet. And when you see it, take it with 100% confidence. Remember, we only trade when our perfect setup is either touching the bottom band or touching the top band. If it is in between the bands, we do not touch it. About 1:20, you will always see the markets, I call it the fake zone, between 1:20 p.m. and 2 p.m. They always bring the market down so they can turn around and run it back up for the close, just so you know that. So there was no perfect trade today. So everybody who posted a profit today, you either took a counter trade, meaning you got in the market first thing in the morning, or you trading in between the bands. If you're trading in between the bands, you're just lucky. That's not the setup. And one of these days, you're going to get caught. And when you get caught, you're going to lose money. So stick to the trade plan so that you can keep more money than they take from you. Again, these are the perfect setups. If you do not see it, do not get in the market. Every day is not a trade day. Now, in your case, every day is a trade day because I want you to get used to placing trades. Once you go live, you will have discipline. Remember, the markets are available 23 hours a day, 6 days a week. These are the profit zone times when there is the most volume in the markets for you to get in and out and grab some money. 8:30 to 9:30. You should have been made your money between 8:30 and 9:30. And you can go about your day. 2 p.m. to 3:30. Pay attention to the fake out. So at 1:30, 1 o'clock, 1:30, if the markets are going up, at 2 o'clock, expect the markets to start to go down a little bit. From 6 to 7, and I'll really say from 6 to maybe 8:30, there is some time for you to trade when you get off work. So if you wasn't able to take a trade during the morning, you could take a trade at night. 1 a.m. to 3 a.m. For those people who, depending on how you work your job, you may be up in the middle of the nights, you could trade anywhere between 1 and 3. Again, you need 2 devices with strong Wi-Fi connection. I prefer a laptop, desktop, or a mobile. Remember, if you only have an iPad or a phone, only trade during the evening sessions, okay? Make sure that you're watching the news. Turn on CNBC and watch the news. I think it was Friday, the Fed said something about the interest rate, and you saw a big old hollow green candle that like shot up. That came from the news. So if you're paying attention to the news, you can possibly capitalize on an opportunity. Always verify the trend of the day by looking at the 15-minute chart. Enter a trade based on the 4-minute chart. Learn how to operate your device, know how to place a trade. If you are new to this training, go back and watch the first 2 videos because it is going to show you how to place a trade in your desktop, or how in the groups, there are videos on how to place trades if you got an iPhone, if you got an iPad, or you got an Android. Now, for everybody, I want you taking no more than 2 trades a day. Over trading is going to set you up for getting caught and losing your money. It is about discipline. What I also want to say is that this isn't a competition, and you don't have to compete with nobody, all right? You're running at your own pace. What I want you to know is that being able to get into this market and getting some money is a gift, and it is a privilege, and you have to always be grateful. So if you get in that market, and I don't care if you get $25 or you get $50, be grateful. Never say, I got a little bit. Well, I only got $50. Don't do that, because what you're telling the universe is that you're not grateful. And what will happen is you'll stay in that place. So if you are grateful for that $25, you're grateful for that $100, guess what? The great I am will continue to bless you and give you more. Because as your skill set increase, as your account balance increase, you're going to be able to trade more accounts. But do not start trading with a whole lot of contracts, because if you don't have the skill level yet, when you're wrong and you lose big. When you're right, that's fine, you'll make some good money. But if you're trading in between them bands, if you're doing a whole bunch of counter trades and you get a profit, you're lucky. But that's not the perfect skilled setup. I want you to be skilled traders. All those little profits add up to big profits. So 2 trades a day, whether win or lose, no more than 2 trades a day. And whatever you make for the day, write it in your journal, be grateful, ask to continue to be better, and watch your skill set and your money, your pocketbooks grow. Because once you go live, there are no do-overs. You lose money, you lose money. Okay, so you don't want to be making mistakes. Make all your mistakes now, because that's how you learn. When you go live, I want you to be confident that you know the perfect setup when you see it. You confident enough to take the trade without hesitation? Because some of you lose because you're thinking too much. You see the perfect setup, but you don't take the trade. And because you don't take the trade, by the time you get in the trade, it's too late and it's reversed on you and now you lost. So you got to be confident that when you see those trades on the left-hand side, just go. Don't even think about it, just go. Whenever you take a trade and a trade turns not in your favor, once you lose minus $50 or minus $100, close it out. Don't leave it open and then be down $200, $300, $500, $1,000. Learn how to close fast, because you can always get back in the right trend and make it back up. So it's easier to make up a $50 loss than a $500 loss. You understand what I'm saying? So if you're following the candles and you getting in when I'm telling you to get in, you should be in the right trend. But if not, like let's say you're doing a counter trend, you're doing 50-50. So it's a 50-50 chance you'll be wrong. Immediately you realize you're wrong, close out. Close out. And then wait for the next one and you'll make it up. All right? Best trading days is Monday, Thursday, and Friday. That's where all the money at. Monday mornings, Thursdays, and Fridays. Fridays between 8 and 12. After 12 o'clock, the markets will take all your money. Because you remember, we are competing against hedge fund managers. We are competing with supercomputers. We are competing with robots. Robots have no emotions. They see the setup, they take it. We hesitate so they can take some of our money. So practice makes perfect. Again, everybody take 2 practice trades a day. Preferably on your desktop or your laptop. This is what your system should look like. The 4-minute candle on the right-hand side, this is when you get in the market. Here's an example. This was a counter trade. Okay, so let's say you see a red hollow candle come out the top. Well, this might not be a good example because it wasn't hollow before, but I just wanted to show you this. This is toward the end of the day. Let's say you want to get in toward the end of the day. This is a solid candle. This was actually a hollow green candle that went out the top. And then the sellers came in and started to bring the price back down. When you start seeing these long wicks, get on in a short. Okay, but to confirm that that's the right thing that you should be doing, look on the left-hand side chart at the 15-minute. What color do you see? So if right now, this right here is what the 15-minute looks like. These candles over here tells you what's happening every 15 minutes. The candle on the right is telling you what happened in every 4 minutes. 3 of these candles make up 1 of these candles. So if you're looking at this, which was a hollow, and you said, okay, it's starting to go down. It's starting to turn a hollow green, a solid green. Should I short? Look on the left-hand side. What do you see? You see solid red. That's letting you know the market is about to trend down. Go ahead and take your short, because guess what? The very next candle is red and it's going to continue to go down. So you look for your perfect setup on the top or bottom bands. And right when you're getting ready to jump in, look at the 15-minute to verify. Okay? So the same thing if you by chance trade in between the bands and don't follow the plan and you trade in between the bands. If you see a hollow green right here, you want to look over here and see if the current candle is hollow. If the current candle is still like a solid red, don't you take it. But if you see a hollow green over here and you see a hollow green on the left-hand side, go ahead and take it. That's your confirmation. All right? Again, when you place your orders from your desktop, on the right-hand side of your chart, you will see something that says Active Trader. When you click this button, it's going to show your order control panel. In this case, we want to short the market and we want to sell. So what are we going to press? The sell market button. You are not pressing buy to turn around and sell. We are not owning anything. We're just hedging and placing position bets. So what we're saying is we want to get in right here and we want to ride it all the way down. So at this price, I'm going to click the sell market It's going to put me in position. When it go down to the bottom, I'm going to click flatten, and it's going to close me out, and I'm going to take my profit. There is, when you pull up this control panel, there is an arrow that's pointing down. When you click this arrow, it will open up and expand the keypad so that you are able to change the number of contracts that you trade. The more contracts that you use, the higher the money you make when you write. Okay, but the same thing happens when you're wrong. Okay, so everybody should be in place. If you're new, you need to do a trade. Do a trade tomorrow. Everybody should be doing 2 trades a day. Drop your results in the group, regardless if you won or you lost. Put it in the group. Every loss is a lesson. You will learn. It is something. You will learn what you did. Either you hesitated and got in at the wrong time, or you got in reversed and you didn't close fast enough, or you're trading in between the bands, or you're chasing candles. That's the only way you're going to lose. All right. But if you do, that's okay. Put it in the group, because we are here to encourage you and to help you get better. So the key to your financial freedom is wisdom, discipline, and practicing in the zone with the perfect setup. So that is going to end the webinar for today. Like I said, every day is going to get better. And I couldn't give you all of this at one time because it's overwhelming. So I had to break it down into pieces. None of this is going to make sense until you get out there and press the button. I need everybody to parachute, go to the highest building and just jump off. Press your button and jump off. That's it. It's paper money. So it doesn't matter. Even if you lose money, once you get your discipline in order, you will make it up. Okay, so this was the candles. Next week, the class may be on a Tuesday because my boyfriend gonna be here on Thursday, so I ain't gonna have time for y'all. So I ain't gonna be around. So it's gonna be earlier in the week, and we probably hit a little bit more on patterns, because there are some patterns that these candles can do that kind of help you predict the future of where the market can go. But I want you to have these little baby steps. After that, we're going to be going into a trade challenge. That means there's going to be a time period. Everybody is going to send me their balances at that moment. So it don't matter whether or not you lost money or whatever, everybody gets a fresh do-over. And you're going to send me your balances. And for a period of time, all you're going to do is take 2 trades a day. And I want to see who grow their accounts the highest. Because if you can master that, then you will actually go to the live group. I got a whole nother group of people, which is the live session. And these are the people that are ready to trade real dollars, make real money. Okay, so the paper trade money is telling you what is your potential. And real dollars is what's going to be going in your bank account and pay bills. And so I want to get everybody to the point where they are confident enough to get into the markets and wake up every morning, cut on your laptop and be like, I'm finna get all the money that is in line for me. I'm getting all of it. I'm getting your money, your money, your money. I'm getting everybody money. That's how you got to talk to yourself. I wake up and be like, I'm getting everybody money. Money just coming at me. That's how I be thinking. Get that money. 2 trades a day. Be like, Angie, 2 trades a day. When I overtrade, I lose money. When I trade between the bands, I lose money. So I'm found I stick to what I'm doing. I'm telling you, when you lose $8,000 to $14,000 in a day, your attitude will change. These markets will humble you. You can make a whole lot of money fast. I'm in building an account to about $16,000, $17,000 in about a week and a half. So it can happen if you discipline, but don't go in with the idea of I'm finna get all the money, I'm greed, and then when you get some money, you still not grateful, you want more money. When you do that, that's when you lose. It never fails. All right. So everybody, tomorrow, 2 trades. Drop them in the group. I don't care if they winners or losers, 2 trades. If you have not placed a trade yet and you don't know how to place a trade, or you still a little bit uncomfortable about just pressing that button, please let me know. If somebody is local to me, we can, I'm gonna have a session, probably Friday, where you all can actually come to the suite where I'm at, and you're gonna press a button, okay? Because once you press that button, it will become addiction, especially when you start winning, you get addicted. But I just want you all to master 2 a day. That is it. Okay, y'all? All right. Valerie, 2 trades tomorrow. Q, 2 trades tomorrow. Adrian, 2 trades. 2 trades. David, I don't know what I'm gonna do with you, but we're gonna have to get it together, because you need to place 1 trade or something. Same with Mr. Morrison. We're gonna get it together. So we got to get 1 trade, because I know you gonna get this. You the money man. You gonna get this. All right. Zephyr, 2 trades. Peggy, 2 trades. Tanika, 2 trades. Damar, 2 trades tomorrow. Miss Tina, 2 trades. 2 trades. Tina got caught today. Tina got caught today in the markets. Lost $3,000, but that was a learning experience. Trading 100% on your phone does not work. Invest in you a laptop or a desktop, so you know when you're in an uptrend or you're in a downtrend. But the great thing about it is, it's paper money. You learn, and the next day you can start all over again. And it's easy to make 3,000.
Miss Angela.
Yes.
So on my phone, I also set it the time to a 15-minute too.
Mm-hmm.
So
you're gonna need 2 devices. You're gonna need 2. You're gonna need a phone and maybe an iPad. One of them will be 15 and one gotta be 4.
Yeah, I got both of them.
Okay.
So I was just like looking at both of them, but you could see you could also set the trend for the 15-minute and just kind of look at that too. Yeah, because when you pull up the 15-minute, the 15-minute looks a lot different than the 4-minute. If you look at it, you'll be like, it ain't as many candles, and you really see we might have been in more red than we were in green. But when you're looking at the 4-minute and all this up and down, you think you going up, but really you're not, So that 15 will tell you the trend. And when you jump in there, whatever you decide to do, look at that 15 and see, do you see a solid candle? If you see a solid candle on the 15 when you finna get in, don't be buying. But if you see some hollows on that 15, then you can buy. If you don't see it, don't do it. Okay? All right. Any other questions? All right. Y'all been awesome, awesome, awesome. 2 trades tomorrow, and we will meet again next week. All right. And Q finna be live. Q finna be live. Q finna be getting all the money. He finna get all the money.
You already know. It's about to go down.
Yes, getting all the money. So I'm excited. Me and Q gonna actually be trading live at the same time and group together, so we get the money together. So that's gonna be awesome.
Yes.
And I can't wait till more of you pick up the skill where you can transfer over into the live group. So we're gonna have one of the biggest money teams in around, especially in my econ. All right, y'all be great. I love y'all. Be safe, and I will see you next week. And if you got any,
we love you too. Thank you.
All right, you got any issues? Hit my inbox tomorrow. I'm finna go to sleep, so don't y'all message me tonight.
Okay. Good night. Bye, everybody.
See y'all later. Bye bye.
Good night.